Got a lot to talk about in a limited amount of time, so I'm going to do quick intros for everyone, and then we'll get into a discussion. Just a little bit about me before I intro other people. I was a photographer for about 12 years before it was blockchain, and serial entrepreneur, angel investor for about a decade, and a venture capitalist. So I've kind of seen both sides. So let me introduce the panel. I'll start with Dr. Xu. Dr. Xu is a partner at Amino Capital, where her focus includes data-driven solutions and blockchain protocols. Since 2012, she has been involved with more than 100 investments, with exits to Cisco, Amazon, Facebook, and others. She's been researching blockchain since 2014 and was involved in the seed and A rounds of String Labs, which incubated one of the most anticipated ICOs this year, which is Definity, and also participated in a number of pre-sales and ICOs, including one of the first unicorns in the blockchain space, Go. Thank you, Sue, for joining us.
Thank you.
And then to Sue's right, we have Xiaohan Zhu. Xiaohan founded ZMT Capital, which is a VC firm based here in Palo Alto. He's been actively investing in blockchain and ICOs since 2016 and is a proud supporter of over 30 projects in the space. Prior to ZMT, Xiaohan was a managing director at JD Capital, which is one of the biggest private equity firms in China, where he managed JD's international funds with $150 million under management. In addition to being a venture capitalist, though, Xiaohan is now directly working on a stable cryptocurrency project, which is backed by DHVC, Pantera, and several other prominent VC firms. So he's both a founder and a VC.
Thank you, Carter.
To my left, filling in for Marwan Forzley, who is the CEO of Veem, we have Jay Hansen. Jay is Veem's general counsel and chief compliance officer. Veem is a next-generation global payments provider, which enables businesses to quickly and securely send and receive payments in local currency. Jay works with Veem's banks, payment partners, regulators, and internal teams to ensure that Veem delivers its services in a reliable and compliant manner. Not an easy task, I don't think. And prior to joining Veem, Jay spent over a decade on the management team of Intuit's high-growth small business payments business, lending, legal, and compliance efforts. Thank you for coming, Jay. And all the way on the end, we have Jalak Jobanputra. Jalak is the founder of Future Perfect Ventures, which many of you probably know if you're interested in blockchain. It's one of the first funds worldwide to focus on blockchain. She's been recognized as a top 40 fintech deal maker by Institutional Investor for the past 2 years in a row. In 2017, she was cited as a top 5 investor powering the blockchain boom. Her firm is recognized by CB Insights as one of the top VC funds in blockchain before it was cool. And Jalak she's also a prolific speaker on blockchain technology at a number of global conferences. Prior to founding Future Perfect, she was also an investor at Intel Capital here in Silicon Valley. Thank you for joining us. All right, with those introductions, let's jump into this a little bit. I know there's varying levels of understanding of blockchain out there, so we don't want to keep it too high level the whole time, but we want to start off a little bit high level. And I want to start with you, Jalak. I think people understand what blockchain is, generally, and personally I think blockchain has the potential to be as influential as the invention of agriculture on society. But for a lot of people, it's like it's a ledger, it's public. What the hell do we like? What is it solving? Why do we need to do this in even the currency space? What are the opportunities and problems that you really think blockchain can solve?
Well, when I went to my first Bitcoin conference in 2012, I was very interested in kind of the fintech element of it and just learning. And as I dug into kind of the blockchain tech that powers Bitcoin, it just became apparent to me that there's just a lot of challenges that the internet and other technologies haven't solved yet. There's so much fraud in so many industries, including insurance, and the more I dig into portfolio companies and the problems they're solving, the more I realize how widespread fraud is. So an example is a company in the portfolio called Everledger that's tracking diamond provenance. They partnered with IBM to build a private blockchain, and there's been a huge issue with counterfeiting of diamonds and GIA certificates, and the industry players could not, there's no technology out there that can solve for having an audited trail that can be verified, that's not tamperable. It's tamper-proof. And so I think like every industry you look at either has that fraud issue and not being able to trust data, and then there's still 2 billion unbanked people in the world. There are 1.5 billion people around the world without any form of government identity. If you look at macro trends such as climate refugees, political refugees, that's just going to keep increasing over the next decade and the next century. And what are we going to do when we need to be able to have education credentials, financial history, all these things that are still paper-based, and we can get them on blockchain-based ledgers. And I'm just talking about this where a lot of people in the U.S. think it's just a database. Why don't people use databases? Well, a lot of countries, and there's no data on databases, so just like they leapfrog with mobile, leapfrog over landlines, a lot of these places are just going to go straight to this decentralized technology, which may seem inefficient now, but will be a lot more efficient in the coming 10 to 20 years.
Let's talk, Jay, let's talk, by the way, anyone can jump in here, so interrupt and jump in if you want, but Jay, let's talk about deficiencies with respect to currency in particular, because I think a lot of people who are new to the space kind of wonder, doesn't Bitcoin do payments? Why do we need 18,000 other things for payments in blockchain? Can you talk a little bit about some of the problems that are there and what you guys are doing maybe, and then what other problems could be solved?
Yeah, so I'm with Veem. Veem is we're in the business of helping businesses pay businesses cross borders. That's our core use case. And we actually use crypto as one of the ways to transfer value, and we do it because it's very practical in certain use cases. And so we serve tens of thousands of customers, and we do that through what we refer to as a multi-rail technology. So we can move money through very traditional ways using banks or payment partners, or in some instances we use Bitcoin today as the main way when we use crypto, where we will transfer that value from one jurisdiction to another with the assistance of exchanges on both ends. And so, there's a lot of theoretical discussion about applications. We use it very much every day in our business. About 60% of transactions by count are moving over Bitcoin in our network.
So Xiaohan or Sue, jump in. I mean, I know Xiaohan, you're working on a stable coin. Sue, you've done a tremendous amount of investing. So what do you think about Bitcoin blockchain for payments, and what needs to be really solved?
You don't have to be sorry, because there are differences between cryptocurrency and blockchain. So I would say for blockchain, we actually invested, skill chain back in 2013, and then back then there was definitely not overvalued. It's like nobody actually. So there was like a big slash of a Bitcoin price. So that's why there were not a lot of venture money in 2013. So we were very happy that we invested in skill chain. They are a blockchain company, and their value, they have a real customer because they are working on supply chain, and then they have real technology, and then their valuation is very reasonable. It's a business. It's just like artificial intelligence, so it's not that much overvalued. However, what I think was more interesting, or which was the largest bubble in human history, is actually more like the protocol layer, public chain. So what skill chain was using before is Hyperledger, it's private chain. But we're working at right now, a lot of the investors today, you're looking at right now a public chain, public protocol. So that's the highest bubble. So why there's a bubble? Simply because the certainty is very big. And the certainty actually, because there was a future certainty, so people were betting on the future. That's why there was a bubble. However, so if you look at what's behind it, two things. One is Web 3.0. Web 1.0 is a website. If you have like auction.com back in year 2000, and then people will imagine all the transaction, all the auction will go through auction.com. But end of the day was ebay.com, not auction.com. But the certainty is very, very big.
So you're saying there's certainty at the macro level, but whether you can pick good companies now.
Exactly. So the other one is token economy. Token economy is really like, because Web 3.0 is decentralized, so token economy is really beautiful. It's the first experiment which is successful is Bitcoin. So Bitcoin showed that either you're a miner, either you're actually doing, like provide services, whoever have resources, you contribute to the protocol, you get reward. Nobody forces you to do mining, right? Because you can make money. So you can calculate, unit economy to locate where is the lowest electricity bill to actually make you make money. So this is beautifully designed. However, there were a lot of challenges in the technology, basic layer in terms of public chain. And then we were saying that healthcare and fintech will be the most interesting area for crypto public chain. Like company we invested called New Cipher, they enable medical record to be shared between hospitals, which the data that never been shared before.
Okay, so there's a lot there, and I actually want to come back to some ICO stuff. But before we do, I want to let Xiaohan jump in just on the currency side, because I know you're trying to solve some problems on the currency side. So can you talk about that?
Yeah, sure. So it's very interesting, we're talking about cryptocurrencies, but if you look at these cryptocurrencies, are they real currencies? So imagine if you live in a village, there's only a fixed amount of supply in the market, then you have a hyper deflation in your economy. Which happens is, for example, if you're a baker, you buy flour, you buy butter, sugar, you make a cake, you sell tomorrow. The goal for you is to make a profit in the currency. But what you find tomorrow is that the currency you can exchange is actually smaller than the amount you have paid for your ingredients. So why would people do any work in such an economy? So fundamentally, I don't see any cryptocurrency today are real currencies. They are more like gold, or I call them like the new form of securities, which represents a major social economic change. We can elaborate on that later. But a real currency has three functions. It's a unit of account, medium of exchange, and store of value. The existing cryptocurrencies are good at store of value, but they are pretty poor in terms of unit of account and medium of exchange. So I was talking before we had this panel about Veem that they don't want to take any cryptocurrency risk. Anytime when they try to transfer money cross-border with cryptocurrencies, they have to buy from this exchange and immediately sell on another exchange to hedge out the risk. So that means if any transaction doesn't complete instantaneously, you're incurring tremendous risk in this cryptocurrency environment. So that's one of the things I think got to be addressed in the future to have a healthy cryptocurrency economy moving into the future. Yeah.
Okay, so let's talk about then. I know a lot of people in the room are investors, and most people on this panel are investors. How do you evaluate crypto investments, and do you evaluate them differently, especially in this kind of ICO world where maybe it's a token investment that you're making? I don't care who wants to talk about that. Anyone have a thought?
Yeah. So I view crypto, or crypto assets, as I would call them, a subsector of blockchain. To me, blockchain is like the internet. Blockchain technology is the internet. The next wave, the next major wave of technology kind of evolution, along with AI and IoT. I don't think any one of those technologies will be as effective on their own without the other, and that's why our fund, since we started in 2013, has had a convergence thesis around AI, IoT, and blockchain infrastructure. That being said, I do believe tokens are the future. I think there's been too much of a rush to issue tokens because there was a regulatory vacuum for much of 2017. That's now being corrected, and we've really gone from tokens being open to kind of everyone to invest in to these private pre-sales that look a lot like venture again. and so we still mostly do equity because we're seed investors, we do some Series A's, but I find that some of the smartest entrepreneurs right now, because of the regulatory uncertainty, they're looking to partner with the right investors at the very earliest stages still, in return for equity. Now, where I think well, a lot of people said ICOs are kind of death of VC. I actually think that may happen with some of the later stage funding, but what I'm saying is kind of a return to equity at the earliest stages.
So I want to talk about that a little bit because Sue and I were talking about this and how beforehand about how tokens have kind of changed startups. And what I've seen, and you can jump in after this, right? But what I've seen is that you've got in the past startups would get some venture capital, and then they would hunker down and work on a product and build their business, and they wouldn't have to worry about kind of the what's the value of our stock price IPO thing that public companies have to worry about for a very long time. But now, you've got 5-person startups whose capital is coming from predominantly the value of their token on an exchange. And they've got, instead of hunkering down and focusing on their product and business, they're scrambling to make sure that they've got there's a lot of hype and good public perception.
Right, they're on Telegram and they've spent, a lot of that ICO money that they raise on these social media channels, marketing budgets.
Yeah, so I want to talk about that dynamic. What do you guys think about that?
So as for Amino, we actually were dragged into this new wave because we actually invested in equity of Quantify, and then in 2013, it's a blockchain comes beautiful platform for ICO. However, they saw, oh my gosh, there were bigger opportunity to do the anti-value protocol open platform, and then they actually pivoted to be definitive. Suddenly, a company that based on years of research, they only raising token. What do we do? And then we have to invest in it. Same thing as of today. There were so many researchers from Berkeley, Cornell, like Tsinghua or Stanford. These are the companies that, dear to our hearts. These are talents that are dear to our hearts because we have been angel investors and early stage investors. So we have to somehow, this is the person that we will back. So because the firm, I think mostly our own money, even as today, we are actually raising over $100 million or $150 million fund plus a hedge fund, it's still like 10% of GP money. So it's easier for a fund like our side to pivot. So that's why, and eventually we were like, oh my gosh, we're holding more liquid asset that we should be, and then we can sell just like, say 20%. So that's why we are actually forming a hedge fund because I think because we're small, so it's easier for us to pivot. And also because we have no strategic money, so it's easy for us to pivot. Another thing is, for how do you tell? I mean, it's, as we discussed about earlier, as token investor, it's not just that you're equity investor, so you actually provide value by, exchange CEOs or give them, like a business deal, introduce them to Fortune 500. For token holder, you have, after the company went ICO, so you're a token holder. So you have to do self-compliance. You have to do self-regulation. And then you have to protect the other token holder. That's your responsibility. How do you do that? So there is no press conference for CEO, public company CEOs. So you have to closely party with the CEO every day. And then it's so challenging. You have to listen to them. You have to go happy hour with them to say, oh, we are launching with certain things. And then we can do risk control. So it's so challenging for traditional venture capitalists. You have to do so much work. And also, because you're the token holder, so how do you make your token value go up? Two things. Community. So you have to have influence in engineers. Nowadays, there are so many chains, so you have to more like, but there is like Stanford student come to you, they'll ask you, which protocol is good? And I want to build on top of it. Then you have to influence them and tell them why this protocol is good.
It just happens to be in your portfolio, right? Yeah. Xiaohan, do you have anything to add?
Yeah, actually, I believe cryptocurrency and ICO actually represent a major social economic change that only happens every couple hundred years. So the reason for me to say this is if you look at our existing financial market and the existing financial system, it's created during the Industrial Revolution timeframe. So at that time, I mean, basically by heart, like we as human beings are always going through the decentralization path. So during the Industrial Revolution, there is a confrontation between the owners and the labor force. So stock was invented at that time to decentralize the ownership so that to align the incentive of the factory owners, the investors, and the labor force, so they can incentivize together to make the pie bigger. That's why the modern corporate finance is all about maximizing shareholder value instead of maximizing values for the owners or the employees. So that works in the last 100 years or 200 years. But now with the productivity changes and with the collaboration changes in the economy, we're moving more towards a service-oriented economy. If you look at shared economy like Uber and Airbnb, these companies, not only they have their shareholders, their founders and employees, there's also passengers and drivers on the ecosystem. If you just want to maximize the value of the first three groups, you will be sure you will squeeze out the value of the other two groups. So I believe with the cryptocurrency and ICOs, it's representing a new way of people share values. Instead of trying to maximize the value for a company, we are trying to maximize value for the entire ecosystem through the cryptocurrency as a vehicle. So that's why I believe most of the cryptocurrency today representing a new form of securities. The exact governance of these securities, the method still need to be decided. People will work around it, and it will evolve to solve the problem we're currently facing. For example, after people raising hundreds of millions of dollars, what if they run away? Who's going to chase them? That type of things. Yeah. But eventually,
we're running out of time, so I'm being told to I think wrap this up. But it is. I would like to quickly let everyone do a. And by the way, just to touch on your point, I think someone recently reported 81% of ICOs are scams. So you do have to be careful. Maybe we could go down and let each person for 30 seconds maybe give us a prediction for the next year, just the next year, what's going to happen in the blockchain space, or something interesting that you think is going to happen or should happen.
Our second fund, we're investing heavily around crypto asset infrastructure. I think the security and trading and data analytics and compliance still need to be built out, and I think we're going to see a lot more clarity over the next year. We'll see. I mean, Goldman just announced the opening of a Bitcoin trading desk. We're going to see a lot more institutional money start to come in once that infrastructure is more in place.
Great. Okay.
Well, I have no idea.
That's probably the best answer that anyone's going to get. But
I guess what I do know is we're focused on practical applications so that when these things have the characteristics to put to use, we're ready to use them. And so that's what we're focused on.
Sue?
Yes, I think this year there were some experiments that you wanted to pay attention. One is the launch of Infinity, which we actually backed, and then another one is Cosmos. It's an interchain, based on interchain technology. So there are a lot of, and TrueBit, which is a very good off-chain. We didn't invest, we didn't get a chance to invest. It's really good protocol. And then all those last year was ICO, right? Because Ethereum, their mission is to let everybody issue token, very easy. But Infinity, Cosmos, TrueBit is for every business to issue. Yes, so it's gonna be another, yeah.
Awesome.
I have two petitions. One is a lot of people in this crowd will buy cryptocurrencies in the next year. The other one is, a lot of crypto projects, their mainnet is supposed to be launched this year, and we'll see some accountability and credibility in this market. Yeah.
So what I'm hearing here, just to sum up, is I hope I'm accurate generally. But what I'm hearing is that it's really kind of maybe similar to the .com. It's the people building the underlying infrastructure that will kind of survive and during any kind of bubble. It's the people who are actually building the underlying infrastructure for the future to allow future businesses to use the blockchain that are probably the best bets right now. Cool. All right. Thank you, everyone. I appreciate you coming.
Everyone, thank